Hello dear students, today we are going to discuss on a new chapter, that is financial statement of a company. Students, in your previous classes you have learnt about source document, preparation of journals, posting from a journal to ledger, from ledger accounts preparing trial balance, and preparation of financial statement in the form of profit and loss account and balance sheet. So in this particular chapter, we are going to discuss on how companies will prepare their financial statements. So financial statements are the end product of accounting process or accounting cycle. These statements are the outcome of summarizing process of accounting and the source document of information which shows the profitability and the financial position of the company. Financial statements are basic and formal annual reports. The financial information is normally communicated to various users, classified as internal users and external users. For example, owners, managers, employee are internal users of accounting information. Investors, lenders, suppliers, customers, and so on are the external users of accounting information. So the statements include the balance sheet, which is called as the position statement, and the income statement or the statement of profit and loss of a company. Let's quickly look into the features of financial statements or the nature of financial statement. The first one being, it records facts in original cost or historical cost is the basis for recording every transaction. For example, the building is being recorded at its original cost. Let's say if it is being purchased in 2019 for 5 lakh, it will be recorded as 5 lakh in 2020 as well. The second feature being accounting convention. Certain accounting conventions are followed while preparing the financial statements. Now again students, if you refer back to your first PUC accounting, in theory base of accounting, you have learned various accounting conventions. So, financial statements do adopt certain financial or accounting conventions while preparing the financial statements. For example, stock of goods is valued at cost or market price, whichever is lower. Over here in this example, convention of conservatism is being followed. Postulate. Financial statements are prepared on certain basic assumptions known as postulate. Again, you have learnt about going concern concept, which means the enterprise will continue in operation long enough to carry out its existing objectives. Apart from that, you have learnt about money measurement postulate, realization postulate, and so on. The next feature being personal judgment. Students, there are some facts and figures prescribed through financial statements are based on personal opinion, estimates, and judgments. For example, provision for doubtful debts are made on estimates and personal judgments. Again, you have learned about good debt, bad debt, provision for doubtful debts. Now, all this is being based on personal judgments or opinions of every individuals. Objectives of financial statement. First one, to provide information about economic resources, that is the assets of the business, and the obligations in the form of liabilities of a business. Secondly, to provide information about earning capacity of the business. How much is their earning capacity from one accounting year to another accounting year. To provide information about the earning capacity of cash flows, that is in the form of cash inflows and outflows. And fourthly, to judge effectiveness of management, how correctly they are being able to utilize the funds of the business with minimum cost. Types of financial statements. The first one being the balance sheet. You have already an idea about what exactly is balance sheet. And balance sheet equation is asset is equal to liability plus capital, or you call it as equity. Secondly, income statement or statement of profit and loss. Now students, you need to understand that every company registered under the Companies Act have to prepare the financial statements, and they have to prepare note to accounts as per the Schedule 3 of Companies Act of 2013. So let's have a look into the first one, statement of profit and loss for the year ending 31st March and so on. So first we will have the particulars column followed by the note number and amounts. Now what exactly is this note number? Students, over here, just like in your mathematics, you prepare working notes. So just like that, for the statement of profit and loss, you're going to prepare working notes, which are called as accounts to note or note numbers. So over here, when you're preparing the statement of profit and loss, only the main headings will be represented. Anything related to main heading will be shown in the working notes. So to begin with, first one is the income. So revenue from operation and other income. Both added together, we are going to get the total, which is called as A, income. B is going to be all the expenses. So that includes cost of material consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress WIP, and stock in trade. Employee benefit expense, finance costs, depreciation and other expenses, all put together we will get the total of B, which is expenses. So let me quickly tell you what is revenue from operation. It includes sale of products, sale of services, other operating revenues. In case of cost of material consumed, here we will have raw materials, purchase of raw materials and less returns. In case of stock in trade will nothing but be the purchases of goods. Changes in inventories is nothing but the cost of goods sold, COGS, that is equal to opening stock plus purchases minus the closing stock. Again, if you refer to the financial statement 1 of your first PUC, you have learnt about cost of goods sold formula, which was a 6-mark question. Next we have the employee benefit expenses in form of wages, salary, leave encashment, staff welfare, contribution in the form of public provident fund and so on. Finance cost. Finance cost will be in the form of interest that you are going to pay on any sort of borrowings from bank, or maybe interest that is paid on debentures, bonds and so on. Depreciation, gradual decrease in the value of asset. So depreciation is charged on tangible assets. Amortization will be charged on intangible assets. For example, goodwill, patents, trademark, copyrights and so on. Other expenses, for example, power and fuel, rent, repair charges maybe on building, machinery, payment of insurance premium, rates and taxes, electricity charges and so on. So with this, we will get profit before tax. So how do we arrive at this? It is going to be A minus B. We would have got the totals. We will get profit before tax. Now you need to reduce the tax. So normally students in the question, they will give you the tax percentage. For example, like 30%, 20% and so on. So on this particular amount, you're going to calculate the tax, and finally you're going to get the profit after taxes. So in the next upcoming video, we will work out some problems under statement of profit and loss, which is going to be a 6-mark question. Thank you.